Good morning, good morning, good morning, good morning, everybody. Good to see you. Super excited to be here with you today in the new studio, albeit quite the minimalist look. So I apologize for being a few minutes late. Was just coming from another live stream that was super excited to do with another YouTube collaborator. They're over on Real Estate Mindset. But excited to be here, answer your questions today. Just like we talk about in the title, is this a crisis or an opportunity? It's a trick question. The answer is it is both. So there are a ton of opportunities in this market. It really, truly is hyper local. The thing that I would tell you is please, please, please be doing your work in your local market. A lot of these guys talk about national crash. That's what they have to be talking about, national crash, because they believe that's what's coming. I understand. I disagree, but I understand. What you need to be looking at is your own hyper local market. Somebody can say right now, oh, the market's awful. It's not awful in my market. Stuff is still selling over list. Stuff is still also coming out at wish pricing. It's absolutely insane. Now, that all being said, everybody's market's different. There's 500 markets in the US, 500. Maybe you're in Vegas and you're getting crushed right now because it really is looking for panicked sellers. I know I'm shopping for a house there. And so I'm waiting because I'm not going to catch a falling knife. In other areas, it's stable. If you're an investor, it's a different story than if you're a home buyer. But we'll ask and we'll answer a lot of your guys' questions over the next hour and a half. We are going to go an hour and a half today. Super excited to have you guys. Like what we've done for the last 3 weeks. This is the last week that we're going to do this. We're actually going to raffle off a limited edition Lumberjack Landlord t-shirt. This is me actually thumbs up holding the house. This is the only time that we're going to do this in a black tee. It's the only time. When these black tees are gone, they are gone. Period. End of story. When it's this logo in a black tee, when it's gone, it's gone. We're not replenishing this logo on a black t-shirt. We will have other logos. We will have other color shirts, all that good stuff. This is the only time, which by the way, is black. It's slimming. If you do a super chat, even for a couple of bucks, you get entered into the drawing. At the end of the show, we'll actually roll the dice. When we roll that dice, whatever number comment you were that comes up, that's who gets the shirt. So super excited to be with all you guys this morning. And we're going to start rolling through these awesome questions, which I know are awesome questions. And so we're just going to get going. So if any of you are joining me from the StreamYard from over there and the live stream over on Real Estate Mindset, super excited to have you. Please feel free to ask questions. And while I'm not a first-time home buyer channel, I actually do know how to buy my own home, my own first home. I've done that. I've also recently bought a new first-time home or primary residence is the word I'm looking for. Sorry, it's Sunday and it was a long week. But anywho, let's jump in. Let's get some of your guys' questions answered. Again, new studio, so we're still working on lighting and all that other happy stuff, but it's super excited to have you guys here today. And the quality obviously will get a whole lot better as we go over in the next few weeks. But we had to get all the tech signed up and set up, so we're all good and we're live. So let's start in. Dividend Dave, hello and good morning to you. Good morning. Phil Nealon, good morning all. Thank you, Phil. Kip, damn, Dividend Dave got me. Good morning, you all. Whole family is good and healthy. Yes, Kip, I really appreciate that. Thanks for the knowledge. Phil and Nealon, thanks for the super chat. I always appreciate the super chats. Entered in for a t-shirt, Lumberjack Landlord, limited print right here. Thanks for the Sunday show. Ready for knowledge. I'm ready to drop it. As long as you guys got good questions, I'll be giving you great answers. Frida, thanks so much for joining the show. First time I've seen your name in there. Appreciate you attending. Legacy Op, happy Sunday. LJ and family, thank you very much. Matt Bittner, good morning. Theta Hedge Capital, hey everybody. Ronald Zion, good morning, Lumberjack. Cool logo. Thank you very much. I appreciate that. That is one of the featured walls here, and we're still adjusting camera heights and all this other happy stuff. So don't worry, give me some time. It'll look better in the next week or two. And let's see. Jay Smith, LJL is the best. Thanks, Jay. I appreciate that. I certainly try. Chester Williams, what's up, Lumberjack? Not too much, Chester. Good to have you here, my friend. Kip Stevens, thank you very much for the super chat, Phil. I greatly appreciate that. Can't let Phil get the jump on me. I know Phil did get the jump on you though. And Phil got you on the super chats, and Dividend Dave crushing it, got you there in the comments. So appreciate you guys. Financial Firefighter, morning everyone from Hawaii. Good morning. Rough morning, I'm sure. Actually, it's really early there, eh? Like 7 a.m. So very cool to have you guys. All right. Let's see. I missed the past couple of weeks, not an 11:30 a.m. start anymore. Only switched for this week because that was the only time that the three people could accommodate there on Real Estate Mindset, which is totally cool. Loved being on with the guys. It was a lot of fun. I'm sure we'll do it again soon to get updates from folks and talk about the market, but really a good time. I think that Travis from Real Estate Mindset is probably the more one of the most straight shooters out there when it comes to this is what's happening in the market. I don't agree with everything that he says, but I think he's really done a good job of sharing his journey. I just think that there are some things that we do disagree on, but I think that it's content to see some of the other side, because I think he thinks there's going to be a bigger correction. Don't want to put words in his mouth, but I think that he's a good contrast. Because we don't agree on everything, but we do agree on some. Theta Hedge Capital, Lumberjack. What R-value rock would be good to insulate floors between basement living space in the Northeast? I would recommend, if you can fit it, R30, because then you're crushing it. You can't get any better. If you can't get the R30 and it doesn't really fit that well, I would go with the R23. That's what I would go with. That's based on my experience. Yours might be different. The biggest thing is, yeah, I would look at Rockwool R23 or R30. All-nighter hider. I'm here. We can start now. Thank you so much, all-nighter. You're the best. Sorry, I'm breaking my own rule of I got to do super chats first. So AZ Joe, hey man, thanks for the really cool alligator one-up. I appreciate that. Your name is in the drawing for the shirt. Chester Williams, could mortgage rates could top 8 by year end? Yeah. Yep. Sure. Yep. I think it's a 25 to 30% shot. So quarter to a third. But yeah, I think they can get there. They're in the low 7s now. And with another 125 base, I think the Fed's going to do another 75, another 70, another 50. I mean, I think they're going to try and break inflation best they can. And banks are nervous. And so they're going to add margin to that. That's going to put us in the 4s. And so I think there's going to be margin to that. So I think high 7s, and when I say high 7s, 7.5 to 8, I don't think that's crazy. So yeah, I think that's quite likely. Tom Kine, morning. Good morning, Tom. Good to have you. I did get your message. I'll always be responding back to it later because that's actually a series we're doing. Paying for this live. This is a tax deductible. How is Hoth 2.0, by the way? Dividend Dave, Hoth 2.0 is getting chilly. It was 43 degrees this morning when I woke up. That is a little bit cold. The good news is I had a fantastic video that I released on Friday. Those are the 5 things you have to make sure you're doing to get ready for winter. Do those 5 things, and I guarantee you're going to have fewer phone calls this winter. There's no doubt in my mind. You do those things, and you are doing a lot of inexpensive but very preventative maintenance that's going to ensure that A, you have fewer problems, and B, if you do have a problem that arises, it's going to be something that you're going to be able to remedy. And actually, you know what? I'm going to throw a third one in there. The third one that I'll put in there also is going to be, if you have a problem, you'll find out about it now, not when you actually have the problem 3 months from now. That's why we do regular maintenance on our systems. If something were to occur where a system all of a sudden, dies, largely they don't just die. There's issues that are starting to occur. There's problems that are starting to happen. And then what you end up finding out is, oh my gosh, I wish I'd just known about this earlier. Had I known about this earlier, I'd have been able to address it and fix it. So that's one of those big things for sure. Let's see. So Dividend Nave, thank you very much for the super chat. I appreciate you guys very much for the super chat. Real quickly, wanted to mention, I've got a friend of mine that is just a good, cool person. And so, yeah, real quick, let's see. Super person. And she's doing some work with somebody. And I think that this is a fantastic area. It's, for me, I'm all about veterans, cops, these guys that keep us safe, whether it's, domestic or international. I just really appreciate those folks. And I love when charities can help meet people where they're at and meet people where they're interested in. Because I believe in the saying, interested is interesting, and people don't care how much you know until they know how much you care. And so those are some things that are pretty near and dear to me and are part of the charities that I help out. And so 5 Stones Fight Club, I kid you not, 5 Stones Fight Club, check them out online. I think they're a pretty cool organization. And I would just encourage you, check them out and see if it's something that in any way, I know that a lot of these organizations have a challenging time making bills, especially when they want to make an impact in local communities. I think these guys are doing an awesome job, not only here, but also abroad. A lot of them are ex-military guys that are using the gifts, talents, skills, and abilities that they have and the things that they were trained in to then go overseas and make an impact in people around the world. So people actually feel that the United States cares, not that just we've sent another care package and then it's a nameless, faceless thing, but these guys put a face to the generosity of our country. So I appreciate them. And there's absolutely, Lumberjack Landlord will be sending them a donation. I appreciate them and all the work that they do. So thank you again. Like I said, check them out after the live stream, not before. Robert Fallon, hi Matt, I have more insulation winter questions. Okay, hit me with those questions, I'll answer them. Ryan Ellen, want to win a shirt, just me today. Lexi's at Nana's. I get it, Lexi is at Nana's. It's actually funny, we our kids have a lot of Nanas, so it's actually kind of funny because we call them all different things, right? So it's nanny, it's nanny, it's grandma, it's Grammy, it's a little bit, and that's the whole difference that we know. So yeah, anyway, I digress. Let's see. All right, so I see Johnny's, so I see Robert's question. So the cold water pipes over the heat tape, foam or fiberglass, and I am guessing the thermostat should near the basement door. Yeah, you want that thing as close to the coldest source as you can get. So I don't have one to demonstrate for you guys today, but when you buy that heat tape, and it's actually in that video in the links, those are the products that we actually use. I'm not just telling you, yeah, use this one. I actually use these. So there's a little thermostat there at the end of the heat tape. I always leave that outside of the insulation. Me personally, I actually like the fiberglass more, but I don't know about using the foam stuff, but I actually like the fiberglass more. However, when you're fiberglassing those cold water pipes and you're putting that thermostat out so you can turn on that heat, when you're doing that, the biggest thing that you need to pay attention to is that thermostat is out of the insulation, because you want it turning on the heat tape or that heat line. You want it turning on when it's cold out there, not just when the pipe might be cold, right? If that makes sense. So make sure that when you do that, make sure you're keeping that thermostat out and that you have it towards the closest part of your basement, i.e. usually it's your basement door. If you have a drafty window, fix it, man, fix it. But if it's the basement door, that's usually one of it, or it could be a number of different things. But yeah, check it out, take a look. But that's what I would do, Robert. Hopefully that answers your question. Let's see. Oh, we got our guest. Look at this. It's my good buddy Dion. What's up, Dion? I can't see you, but I can hear you.
Figured I'd show up eventually. What's that?
How you doing?
Marvelous.
It's not a map, but it's a start. So.
I look forward to seeing what's back there.
Yes, there's many, many more things to come. There's going to be, we actually designed this office where I will probably post a picture on, I'll probably post a picture on Instagram, but I actually built with my wonderful, what would you call him? PM, I guess. He said, hey, what if we made a cart and put all of everything on the cart? And I was like, I like it. So I'll send a picture, but it's pretty cool because everything is loaded in one space. So I can roll it around to 4 different walls. So you'll actually get the feeling like I have 4 studios. Not that rich. Not that YouTube rich. So anyway, yeah, not that YouTube rich. So Dion, good to have you, my friend. Anything from the monologue that you wanted to cover or respond to that I may have gotten wrong? It's always possible.
No, just say good job on real estate mindset this morning.
Thanks. I thought those were good questions that they were asking.
Yeah, it was fair. I mean, it wasn't attacky.
No, not at all. No, I thought it was really good. I mean, I think that, Travis is great because he's an agent and he's a mortgage guy. He's a loan officer. And so being able to have those conversations, he has a little bit of inside baseball. He's seeing what he's seeing on his side and understands the market analysis. Obviously, we look at it from a different perspective, but even as a first-time home buyer, it was really interesting because he did a video last week that talked about, I spent $55,000 this last year in rent and what I get for it. Right?
No, I like his perspective. I like and it's hard to say this without because I don't want to attack him.
Yeah.
Because this isn't about him. Most investors don't realize your agent and your lender aren't your mentors.
Right.
Right. The agent's job is to close deals and the lender's job is to sell loan products. And if you talk to a lender, it doesn't matter which one. They're going to tell you things they can do and things they can't do. And it sounds concrete.
Yes.
Talk to that same lender 3 weeks later.
Yep.
Their criteria will change. So they're seeing their local market. And from his perspective, he is just now, from what I've seen of his content, getting into owning rentals.
He owns, so I think he owns something, but yes, he's not a real estate investor per se.
Right. So I totally get he's trying to talk to the first time home buyer.
Yes.
And if you took what we say to the first time home buyer, that's horrible advice. We're saying, run the numbers, only look for a great deal. And a home buyer is usually thinking, is it where I want to live? Is it facing the direction I want it to do? Does it have the kitchen I want? Like, it's a totally different set of people to be talking to. So it's kind of cool to see the two come together and go.
It is, because I think that there's some commonality there. I think that, I'm buying a second home in Las Vegas. I wouldn't sign a deal right now unless it were 20% under what the last comp was. Because it doesn't cost me anything to wait. I don't have rent that I'm paying. It costs me $0 to wait so I can be an opportunist. And this is the problem. When it gets to 20% off, other people might not be able to be buyers at 8 or 9%. I can be. And so that's what's going to get me a big discount, is because that stuff's not going to affect me, right?
I wish I had the brains to put this into a video, but there's an equilibrium of price.
Yep.
People are willing to pay a certain amount to live there, and people are willing to buy at a certain yield. So as rates go up, we lose the yield and the payment changes for the home buyer. So it seems logical to go, I'm going to wait until rates go up so much the price comes down, which we know doesn't happen.
Sure.
But if it did, if price came down, everyone's waiting for almost the same numbers, which would then bring the demand out and it would just be a bidding war. So I haven't seen good advice on why to wait unless it's your situation.
Right. Exactly.
If there's something changing in a person's life that says this is not the right 3 months for you to be buying.
That's right.
Right. But it's never market specific, because there's so many people with money sitting on the side waiting for the same thing people say, I'm going to wait to happen. So it would never actually happen.
The other thing too, Dion, is, are people taking into account the fact that that $100,000 they have in the bank account is worth 8% less next year? Are they taking into account all the financial and tax benefits that you get owning a home and not renting? Are they taking into account the fact that they can buy a house with an ADU? Maybe you don't want that. Maybe you do. But if you don't, okay, that's fine. Then it still might be time to wait. But that's why this really is an individual's choice. From an investment perspective, it's very simple. My rents that are taken away from my gross, or my gross rents minus my mortgage and all expenses, and that's the end of the money that I have. And how much is that? What's my yield or return on capital based on what I put into the deal? That's it. That's it. It's a different equation for if you're a home buyer. It's completely different. I completely recognize that. Anything else to add to that?
Howdy, Beth. Nice
Oh
to see
yeah,
you
I
here
see
today.
Beth. Look at that. Hey, Beth.
You said something the other day, Matt, that was it resonated really well with me. So I appreciate your probably attempt at sarcasm, but it was good. Since 2013, 2012, every year there's been a reason to wait.
Yes.
Yes. Some reason, the crash, the silver tsunami, rising interest rates, whatever the change was, every single year, pandemic, eviction moratorium. People who have waited are missing out on everything for the last decade.
Yeah.
every time, like right now, it seems like here are good justifiable reasons to wait.
Yeah.
They're still going on.
Yep.
And so when we say it's always a good day to buy a great deal, be looking for the great deal. If you don't find it, it's not going to be today. You're just not until you find it. So don't buy a bad deal. Don't lower your standards, but keep hunting every day. You sent a message saying it's a good thing we're not in the convincing business.
Yeah.
It's not my goal to find people and change their opinion. It's my goal to find the people who want to invest and say, here's how I would do it. If you can ignore all of these people saying, don't do it now and to wait.
Yeah. If you can talk somebody into something, they can be talked out of it. At the end of the day, I'm not trying to convince anybody, go buy a home or become a real estate investor or be a landlord or be a self-managing landlord. I'm not trying to convince you. I'm only here to share my story and show you how that process and the things that I did made work optional, even though today I still choose to work.
Yeah, no, Dividend Dave said it really well at lunch yesterday. He was quoting somebody, I forget who he was quoting, but Dave said, somebody convinced against their will is of the same opinion still.
Yeah, exactly.
They could just change their mind right back if they see anything that backs up the original theory. It's the people who want to reach financial freedom who are going to make the investment. I think that's where this information is going to help. That's the person we're looking for.
Yeah, for sure. I saw a question that popped out. William Batista, thank you very much for asking the question. I think you're new to the channel, so I appreciate you jumping in here. Rate hikes are to diminish demand. I agree. But how can supply be fixed? So supply is only fixed when you can build more and builders are out. So this is a great question. So builders can only do that. Builders are not going to build in a horrible environment. They need to have an assurance that they can actually sell the house that they're finishing. So all that they may do is selling it, but knowing that a person has 20 or 30 or 40% down, because they need to know that that person is going to be able to get a mortgage and afford the mortgage at the end of that construction, which usually is 6 to 9 months with no major supply disruptions. So how can supply be fixed? Modular homes, I don't see 3D printing as viable right now. I have spent probably over 100 hours investigating 3D printing. It is viable. It's just not the bargain that you see when somebody's like, we did this house for $9,000. No, they didn't. No, they didn't. And it's because they might be able to pour the concrete. It might be $9 grand worth of concrete. But here's what I can tell you. I've looked at the machines. The machines range, and the ones that I was interested in, the machines range between $600,000 and $1.3 million. And they take about 6 months to build. If you're lucky, it's 6 months. So my answer to that question is, I think they're viable, but I think that it's just early on in the process. It's not viable. If your point is it's not viable for mass production, completely agree with you. Because the other thing too is right now, all of those structures are single floor structures. The ones that are 2 floors are actually the 3D on the first floor, and then they're wood on the second floor. They basically build on top of it. So it's pretty cool product. But yeah, it's definitely gonna be a time. Exactly. Thank you. Dion, speak to that graph, please.
So this is the number of homes built by the decade. The little tiny red one over here is the last 10 years. Fixing the supply is not going to be something that's done through building. The motivation is not there. 2008 took away family businesses that have been doing it for decades, decided this is not safe. So people pretty much stopped even making starter homes. The real money was in the high end, 700,000 plus, or double the median in your area. And right now they're having to lower prices. Yeah. So even if we said, okay, we're going to streamline permit processes and we're going to reduce the red tape, the money is not there. The
Correct.
buyers are disappearing because of this demand destruction we're having with interest rates, which is the goal. So, and this is just my opinion, but this time the inflation's not happening because money was cheap. We didn't have low rates that caused inflation. We had pausing the economy, giving everybody a bunch of free money, printing 80% of our currency in the last 2 years, having to bribe people to come back to the workforce, having the great resignation where people are changing jobs, so wages are going through the roof. So we have all this inflation going on that's really not tied to interest rates, but they're using interest rates to kill demand to try to slow the economy.
Right.
That's not going to encourage building. That's not going to fix the supply.
Nope.
As we're seeing demand destruction and everybody goes, well, if people stop buying, we must see prices come down. No, we're going to see less things happen because only people who have to sell are going to sell. A lot of people who are thinking about selling or would sell at the right price are just not going to sell it. They might leave it listed. They might pull it off the market. So as supply comes down with demand, prices are going to stay fairly consistent. I would say within 10% up or down either way.
Yep.
In each market across the country, I could pretty much see that, because we don't have a mass set of forced sellers. We don't have a whole bunch of people hitting adjust. We had over 50% adjustable rates 2006, and a rate adjustment started to hit. That's not happening this time.
Yeah,
So
agreed.
I wish I had an answer to the supply problem, but this is by design. The higher interest rates was to kill demand. Killing demand stops people from wanting to build.
That's right. That's right. Yeah. And then, so yeah, to that point is, I'm very interested to see what the next 10 years. Dion, do you realize that we could be down 30 million homes over 2 decades if we keep the trend that we had from the last decade, because we're going into a recession and what most builders aren't going to build into? It's crazy. Sam Farho, I see that super chat. I really appreciate you, Sam. I'm going to answer your questions. What happens if the bank-owned houses don't sell in an auction and it expires? And what auction sites have you used? So I can tell you exactly. Oh, I'm sorry. I see another one too. Have you considered buying a cheap property in a D area and put a property manager for a year and see what happens? Nope. I don't gamble with my money. I invest my money. And so
Or someone
that breaks
else's
the
life.
model. Yeah, that breaks the model. So no. Sam Farho, what happens if the bank-owned houses don't sell in auctions and expires, and what auction sites have you used? So I have used Xome, X-O-M-E. I have used auction.com. I have used Hubzu. I have used, there was one other one that I've used, but those are the 3 big ones. And what I would tell you is, when it doesn't sell, if it doesn't meet what the bank says is a reserve, they'll actually redo the paperwork and then they will repost it typically a week later. And then sometimes they lower the price, sometimes they don't. So I've done all of that. I've bought foreclosures. I bought multiple properties off of foreclosure websites. I did that, and I actually did one in, I think, 2017, 2018. I did one then. Because people seem to think that foreclosures only happen in bad times. A typical month in foreclosures, 150,000 in the US, a typical month. So when people are saying it's a tsunami of foreclosures, it's not. We aren't even back to norm yet. We're nowhere close. And then Sam, your last question is, owners say there is a second lot that comes with the house. How do I check if the second lot is actually a separate lot that can be developed? You need to talk to, you have to talk to the city or town that you're in. You need to talk to the zoning department, and you can go in. It's usually, you can find it online too, but the easiest thing is just go in and talk to zoning and say, hey, this is the land that I'm looking at. There's a house here. Is this subdividable? And they'll look and they'll say, well, it's zoned as like R12 or R2 or R4, or whatever it is. And based on that zoning, they will then tell you, okay, based on this zoning, this is what you need. They will take a cursory look at it and say, it appears as though it is. They can also say it appears as though it isn't. If they look at that and say, yeah, you're 100% good, then you start the next step, which is working with a surveyor and an attorney to try to get that land set up where you can do that development. I've done that. The next step, you're going to spend probably about $4,000 to $6,000 on. So the free step is going to the town. If that's good, then the next step is going and talking to a survey company and having them do the survey and build up the plan and all that good stuff. Dion, any thoughts on that?
Yeah, Beth talked about this yesterday. Sometimes cities will sound very willing to play, absolutely encouraging you to do whatever.
Yes.
Because transactions help the municipality,
Correct.
especially if you're in a state where you have Prop 13,
Correct.
Property taxes readjusted at sale, and then whatever that rule is, right? So they want the transactions to happen, but that doesn't mean that you're going to be able to build, add the ADU, or make the improvements that you want to. So talk to the municipality, but I would find contractors in the area, and from their opinion, having done work there, ask them, what's it like to work with this city? Do they want more things to happen, or do you have to fight it every time? What's the timeline on actual permit processes, and things like a gopher study in Washington State that can take up to 6 months to find out if you need to buy a bunch of land so gophers can live there.
Yes, so the big thing around here, because we're closer to the seacoast, a lot here is if you see a bald eagle, if you see a nesting willow, if you see any of these things, run the other way, don't walk. It will likely cost you tens of thousands of dollars and you're not going to get approved anyway. The other thing real quickly is people think, oh, I just need a variance. Let me be very clear for the burden of a variance to be approved. For a variance, if you, let's say the town looks at it and goes, you know, the answer's sort of no, because they won't give you a hard no because they don't want you to yell at them. So they'll say sort of no. If they say sort of no, you say, well, what's the sort of no based on? Well, I see that you have everything you need here except for one thing. You need to have a variance. If you need to have a variance, that's when you talk to the survey people and you talk to an attorney. You can look at the docket because every town has a list of the guys, the attorneys that come and argue for subdivisions. Look at the docket, find the people on that list, make calls to them, and then see if they were successful or not, because the burden to prove for a variance is extremely high. You have to prove that you are being adversely affected by not getting the variance. That is a very high burden. Dion, any other thoughts on that?
Nope. That's just do the work before you buy something that you're going to have to build on. Like there's so many aspects. To me, it's almost like the brrr. It's not a beginner strategy.
It is very advanced. I've been doing this for 22 years and I lost on a variance that cost me $9,000. And there was no good reason they denied me. None. I literally got denied because of what was the exact wording that they put? Because of I think they literally said the indigenous fauna on the lot. That basically means that the shrubs, the weeds that grew there have more rights to my property than I do.
My friend in Scottsdale, Arizona had the same problem. They were adding an ADU or a hacienda, whatever they want to call it.
Sure.
And the city made him buy, it was either the equivalent or more than next to him, and never develop it, but water it. Like water an acre in Scottsdale, Arizona, in the middle of nowhere, so they could destroy the fauna and where the hacienda was going to go. I mean, like, so each city could be totally different.
Right. That's the other thing too. The big thing is it does behoove them to take you through the process and try and help you. But the zoning department is completely different from the planning department. It's literally like sales and marketing. If you've ever worked in marketing, usually they hate sales. And if you've ever worked in sales, they usually hate marketing. So it's usually how it goes, at least the people in the department anyway. Ernest Petrelli clearly has something on his mind. And it might just be making sure Dion can't sleep, since he loves to continue to retract those things. Let's see. Matthew Paris, I'm going to save a list of Dion video clips to play for people when I'm arguing against the impending price collapse. He explains my thoughts so much more elegantly than I do. It's the wonders of editing.
Exactly. I can win any argument about real estate, but
yes,
never in a relationship.
Chester Williams, indigenous fauna. Talk about the city trying to come up with lazy excuse. Well, this is the craziness. This is the craziness. Indigenous fauna, like it was literally listed. And that was actually from the state. I talked to the town. The town was thrilled. They were like, this would be great. We absolutely would love to see you do this project. We think it's absolutely fantastic. And guess what happened? The project died. And so I literally was left to redo the house as it sat. I couldn't make it bigger. I couldn't go up. I couldn't do anything. Crazy. Jay Aguilar. So do you only read certain messages? I left like 3 questions up there. I do it as they come in because we always handle super chats first out of respect.
I see why you missed it. I got his first one here because like 3 super chats happened right around his first question.
Got
it. I scrolled up to it.
Hit me.
Lumberjack, I bought a house a year ago and currently house hacking. My plan is to save money and see what the market's like in about 2 years. I'm hoping to find a couple of fourplexes. What do you think the market's going to be like? And what would you do in my position?
Don't have any crystal balls. To me, interest rates don't matter on the deals that I do. The only thing that matters to me is that I'm buying a great deal that gives me great return. because I was buying deals. I'm one of the few people on this channel and that have been an investor long enough to have been buying deals with a 9 in front of them. A 9. So 8's not even the highest I've ever paid. I've paid 9. In fact, I think I'm maybe on one deal. I might have even done 10. But nines and 10s. And so the thing that I would tell you is, yeah, based on 9s and 10s, the only thing that I really care about is those are going to go up and down. If we go into a major heavy recession and then the Fed starts cutting rates and then there's zero mortgage demand and then banks get creative with bad products and the government gets creative with giving stuff away. When it's all said and done, I can't tell the future and all the different solutions that the government's going to try and create winners and losers with and get themselves back in the game on. So all I can tell you is every deal that I do, I evaluate it based on what my current rate is and what the current rents are, because I'm not trying to guess about the future. I'm trying to understand right now. That's what I'm most focused on. And when I'm trying to project rents, if I want to be conservative in the deal in my area, I just use my Section 8 rents because that's lower than market rent in my area. So I know at a minimum, I have a buyer at that number, a renter, a buyer. I have somebody at that number that I know is going to be spending because I know that they need units. Dan, any thoughts there?
Yeah, I want to answer this question too, because I think I have information that Jay might like, and then he's not going to like my answer to his next question. So I want to get one out that he likes first. So you're house hacking and you're planning on buying fourplexes in a couple of years. I think it's a great plan. It's how I did it. It was a couple of years between each purchase in the beginning when it took time for me to figure out how to stack cash for the next down payments. You're also getting rental income on your tax returns, living in a duplex, collecting on the other side. So in a couple of years, when you go to buy the fourplex, it's a lot easier to find lenders that will consider the rental income, 75% of it, of the fourplex you are purchasing on your debt to income ratio, making it easier to buy that property. So there's a couple of reasons why I like what you're doing. It's not going to be as fast as some people expect it, but it's going to be exactly like I'm looking at in 5 to 10 years, financial freedom. Here's the question you have that you might not like my answer to. Also planning to start a LLC. Good grammar. It's a LLC, not an LLC. I like that. And build it up within the 2 years so I can combine what I have learned and what I can get a loan with my LLC for, and hopefully retire or at least replace my income. So before I lose Jay forever, would you like to answer that, Matt?
I'm going to yield my time to Dion on this one, but Ernest Petrilli, I see your super chat. Thank you very much. We're going to get to it after this. Send me an email to lumberjacklandlord@gmail.com. You won last week's shirt. So go ahead.
Okay. Thank you for your time. And then we'll go to the super chat, and then there's some really good questions here.
Yeah.
So Jay, what's the goal with the LLC? There are some times where it makes sense to have one. If you have partners, a LLC will protect you from someone else's mistakes, not your own. If you are ever sued, there is no asset protection from having multiple LLCs. Your assets are at risk. Each LLC is your asset. If you're looking for tax benefits, there are none with an LLC. LLC gives you no tax benefits whatsoever. The IRS actually calls them disregarded entities, which is what the 2 counties I invest in use to ignore. They don't just pierce the veil like they can if you don't do your record keeping right. They ignore, they disregard all LLCs. All single member LLCs don't matter in a lawsuit. So no asset protection, no tax benefits. You can use hard money with an LLC. Most lenders will want an LLC for hard money loans. Not sure why, but it makes sense to them. And if you have partners, it makes sense to have an LLC. If you're adding a LLC to your investing, you're complicating it for no reason whatsoever. You're going to make lending harder. You're going to make interest rates harder. In some places, you're going to make insurance cost more. Refinances are worse. I mean, like everything about investing in real estate becomes more convoluted and hard if you have LLCs. For real estate investing, Matt and I both do not have LLCs. For healthcare, Matt has an LLC. For my nonprofit and the CDL school that I worked at, there are LLCs, but they don't benefit you in real estate the way a lot of people think they do. Hopefully I didn't lose you forever, because I hate to disagree with people.
He said business loan, Dion. And so sure, on a business loan, yes.
So a higher interest rate, you're not fixed rate debt, you have loan revaluation periods. It's like all the negative things you don't want in real estate.
Yes.
Go for it. It sucks. It makes it worse.
separate funds, the whole nine. It's a lot of work.
How do
to
you
get
pay
that
yourself?
LLC.
Like all these things
Yep.
you put in place that make it just harder to run the business,
Mhm.
where with 120 blah, blah, blah units that you have now, 24, you
124.
change because you buy all the time. I have 16. I had 16 since May last year. It's easy for me to remember that. Not one checking account, one saving account, one credit card. Like this doesn't have to be a complicated business. As soon as you put LLC in front of anything, you add all kinds of rules and regulations that I don't even want to take the time to learn. So
That's all true stuff. Dion, did you have another? Oh, Ernest.
we're going to go to your
said,
super
"Thanks for
chat
the
and then we'll come
information."
back to questions.
Yep. So Ernest, chatting on computer now. Okay, cool. I bought my first house hack in May. May. Oh, okay. 3-2. Got it. But rent only pays 45% of the mortgage. Is it a good idea to save for another house hack in 2 years if it reduces my expenses, ADU or a 4-3? It really depends. So it really depends on your market, Ernest, because in my market, believe it or not, 2 large duplexes. So I bought a duplex that was 2 4-bedrooms on each side. That cost me $507K. The rent on those is, I think it's $5,600 a month. I want to say on those 2 units. I just paid, I'm paying 500, or I'm paying 402 for a building that I have to put 200 grand into. So I'll be into it for 602, but then the place will be brand new and it has an as complete value on the appraisal is 780K. And the rents there are going to be maybe 36, 46, 56, 66, 72. They're going to be about $7,200 a month. So what I would tell you is that extra 100 grand is getting me an extra $1,600 a month in rent. What you have to do is you just have to better evaluate the deals. So it's all about deal evaluation and recognizing that, a 4-3 might sell for this, or a 2-1 sells for this, or rents for this. It really comes down to what is the mortgage rate and then what is the return on that deal when you actually have it rented. I would just be conservative with rents. And I think in most markets, I don't know all, but most markets, Section 8 is a conservative number because you have somebody that will rent it at that number.
Yeah. And the second house hack, the other element is you're also going to completely rent out the first unit.
Correct.
So while your second, sometimes people go from a duplex to a fourplex and all of a sudden you start making money for where you live, right? So we hear stories like that and we think, oh, so a house hack has to just get better. I could have went from a duplex where I was paying some of the mortgage to a duplex where I was paying some of the mortgage.
Sure.
Renting out that first unit still makes it worth it. So I would still pursue the second house hack. I mean, if you have the option to, so many people make investing take 10 to 20 years longer because they don't want a house hack.
Yep.
So even if it's just your expense reduction, keep repeating it because you're getting the low down payment, the best interest rate, fixed rate debt, like all the other benefits that come from owner occupied too.
Yeah. So Ernest, being in the Austin area, that's going to be one of the markets that's correcting. So, and again, I think that they're probably in the top 10 for correction. I would say, Vegas and Phoenix and Seattle, and Boise and Austin and Tampa. Tampa is going to be another one. I think those are the areas that are going to correct the fastest. They've already started. And so, like I said, I'm making my national call for a 10 to 20% decline by the year 2020, by the beginning of 2025. So yeah, I think that you just keep on watching the market, but I think the only thing that concerned me about what you said was the 45%. So when you rent out your side, are you still negative amortization? Like, is it just your number doubled, right? If it's just your number doubled, then I would be making sure that before you move out, that you're making 10 to 20% a month on the property before you make that next move. That's what I would consider, because I wouldn't want to do my next deal until my current deal is actually making money. It's got to make money. It can't be a negative amortization deal. So hopefully that helps me, man. Dion, did you have a question that you wanted to do, or do you want me to? All-nighter hider. I was looking at, you're on mute.
Sorry, I was trying to get two sets of chats up because we keep missing them. But Johnny Cashflow, Johnny Ramirez, I wanted to get this because it sounds like he might be going. Just going to meet with GCs. Any tips?
Experience matters. Experience matters. You want to know what was the last project that you worked on? What were some of the challenges that you ran into that project with, with anything? Here, if they were able to get around supply chain issues, pricing issues, how much volume that they do. Most of the guys that I use, they're overseeing, don't pick a builder to do a rehab, and don't pick a rehab to do a build. It's like picking a handyman to do a rehab. Like, they have their niches, and usually they can do parts of it, but the management is what changes. And then some of the skills needed for like new construction versus rehab, those skills tend to change based on like a new addition typically needs a foundation slab. It then needs to be brought, other things need to be brought up to grade. A rehabber is not going to know that. So that's what I would say is make sure you're understanding their experience and make sure that you're picking somebody that fits in their kind of channel. And what do we do when XYZ doesn't happen? Hear how he's going to handle a problem, because you're going to have problems. Dion, any thoughts?
No, not on that one. Sorry.
That's okay. Quite all right. Kurt
I
Jones.
think you summed it perfect.
Yeah, I see Kurt Jones is brand new to the channel. Kurt, great to have you. More about how you file your LLC, S Corp, C Corp, etc. I'll let Dion handle that, because I only use mine for the purpose, or will use mine for the purpose of healthcare for my family in the future. And the whole way it's going to be set up is that LLC will bill my trust for the work that was done in the LLC, so it's funded. That's the only structure that we're going to do it, and that was set up by my accountant.
Yep. Before you set up an LLC for anything, first decide why. If it's for asset protection or tax advantages, rethink it. If it's to protect yourself from someone else's mistakes because you have partners, if it's for commercial lending or whatever, and you have a lender that requires an LLC, not all do. Some commercial lenders will let you do sole proprietor or in your own name for commercial loans. It's hard money that almost always seems to be LLC specific. Talk to your tax pro to find out which structure makes the most sense for you, because sometimes an S Corp can help, but if you have a salary, you could be penalized twice on taxes. You're not supposed to be taxed twice. That's why single member LLCs are pass-through entities, so you only get taxed once on the income. And sometimes when you structure it into an S Corp or a C Corp, it changes how that works. I don't know how it works. I just know I would go to a tax pro and say, this is what I want to do. What's the best way? Yep. But remember, anytime you talk to an attorney or a CPA, they're going to tell you need an LLC, because magically they get to make money when they set it up, maintain it, file taxes on each one. It's so random and weird that they might recommend you have LLCs and multiple LLCs because they cost money that they make.
If one of the things that cracked me up the most was seeing Pace Morby's LLC structure. Should look up that video. He's got like 30 of them. Right.
And so here's my concern for anybody. And if you're familiar with my content, you know what I'm about to say. I don't care if you have an LLC. Right. I don't care if Pace has 600 LLCs.
I totally agree.
My concern is the investor who's got their first house hack, or maybe doesn't even have a rental yet, and is thinking LLC, but has to name it, has to figure out how to pay themselves, has to figure out financing, has to realize financing is worse, costs more. Insurances sometimes cost more. Municipalities run businesses different than in your own name. Like, all of these barriers you put in front when you need to learn what's a good deal.
Yes.
How do I find average? How do I find a tenant? Where do I get my leases? Like all the basics to real estate investing. And then you add LLC to the mix for no reason whatsoever. That's stupid. But if you're Pace and you have cash flow, and you could say, look, I'm going to take this cash flow and give it to the attorney or the CPA, and they're going to set up all this stuff. And yeah, I'll make a little bit less, but for some reason it makes them sleep better. Who cares? That's not who I'm worried about. It's the brand new investor, first 5 years, that's putting all those roadblocks in their way that they don't need.
Right. Ironwood Workman, we can answer this one quickly. With partners, yeah, that's the real purpose of an LLC. is because, we do a deal together. I want to make sure that I'm covered. If you do something stupid, you want to make sure that you're covered. If I do something stupid, and LLC basically make sure that that bad decision by our partner doesn't impact our life. Sam Farho, would you focus on seller financing if you have less than 10 properties total, or focus on conventional financing for now? I would be both. I wouldn't focus on one or the other. I think that you're looking to find a deal. And I always want to, I think Dion's strategy is brilliant, where it's, here's your seller financing option and here's your bank option. That's beautiful, because he's not focusing on how he's going to get the deal done. He's focused on, what is my opportunity in this deal? This is the number that makes sense. That's the horse. The cart is, how do we do this deal? A, can we make a deal based on these numbers? B, based on those numbers, how do we structure the deal? Those are two different things. Dion, thoughts on that, since it's your strategy?
If you focus on one or the other, you might miss one that you had the opportunity for.
Correct.
In the other that you're not focused on. If you're just making seller financing deals, anybody who doesn't have enough equity is just going to ignore it. Anybody who has an agent who says seller financing is illegal, because the agent feels like you're just trying to exclude the agents from the deal because they haven't looked at it. So like Matt said, I make an offer that says, here's my seller financing letter, and it kind of pitches all the things that benefit the seller. And if you're interested, that's the offer. Here's my offer with a conventional loan. And there are some lenders that if you have seller finance notes registered in your name, it counts in your 10 in your name. The lenders are all made different. So it's not like getting a seller finance deal lets you get 12 or 13 loans in your name, and then lenders can freak out. Some lenders don't care about the 10. It depends on the lender that you're using.
Because that really comes down to if they're selling it to Fannie and Freddie.
Correct.
If they're portfolioing the loan,
right.
If they're keeping it in the house, they're putting it on their bankroll. Fannie and Freddie doesn't know about it. Matt Bittner, do you use land trusts? Nope. Haven't touched them. That's a big thing in Detroit. I haven't touched anything with land trusts. Dion, you?
No.
I don't think so. A private trust is what allows one to control an asset without owning an asset and being liable for owning. Yes. I didn't set all my stuff up. That's what I depended on my attorney and my EA, my enrolled agent, who is Bob Langworthy, who is the best in the business. Kurt Jones, for sure. Thanks for the advice. You're welcome. Not yet. I'm still 6 to 12 months away from writing my trust indenture. Got it. Yeah, we did that probably about 5 years ago when I started having kids, is what we did. We basically formed the trust, and then we had to pay to transfer all the properties into a trust, which was like, in my state, was like $300 a property, which was
my brother set up a trust. It was, I think, 3,000 total when he was all done, with 10 paid off properties. So that was the total cost. And for me, trust is more inheritance protection and streamlining that than an asset protection. There's 3 forms of asset protection that I do use, but it's not trust, it's not LLC. It's
yeah. All of ours is basically it is for being able to, if anything ever happened to me, Ashley would be able to run the business the next day. If same thing with her, I'd be able to run it the next day. If something happened to both of us, then somebody takes over custodianship of the trust, and then they manage that, and then they can start selling assets or send it off to property management, kind of really run the balance, and they get to bill the trust for that money for that time. And that's usually how it's structured. And then the other way is having the bank involved and actually having them have a mortgage on it. And then the last way is insurance. I have the home insurance, the fire insurance policy, and I have an umbrella on top of that. And I actually also have workman's comp, just in case, because there's been a rash of some cases where people have done something stupid, not really an accident, but just literally truly done something stupid. And then when they sued the GC, or then they sued their boss, they didn't get anything. When they sued the GC, they didn't get anything. And then they went after the homeowner, and somehow they got something. So hopefully that's just an anomaly. Well, was able to tilt my chair back all the way. Let me fix that. There we go.
Would have been great if you fell and put a hole in the
That'd have
drywall.
been awesome. Literally just
First debut of The Office.
Exactly. I just debuted my office and I just put a new hole in the wall. There we go. Now we're
When I
good.
first set my office up, I was doing a video with the crystal ball
Yes.
and dropped it
No.
and broke the LVP.
Oh, get
So
it.
I spent a Saturday planking out my own LVP.
Oh dear God. What a nightmare. Iron Workman. What I do not understand is how a wholesalers can lock in a contract and sell it to other people that might or might not buy it. They fog the titles, etc. Do you guys know much about this? So as a wholesaler, you do put the deal under contract just like an end user does. That's all you do.
But you put in the contract, you're out.
Correct. You usually have an out in that contract, which is, I have 30 days due diligence is one of the famous ones that I've seen. So I could, if I wanted to, go out there and start wholesaling. I could find deals. I could put them under contract. And then I say I have 30 days to do my own due diligence. And then all the time I'm trying to basically assign that contract. I actually get that then listed on the HUD, on the Alta statement. And so that's how my last couple wholesalers got paid. They were literally on the closing doc saying, this is what the sales price is. And it, then it gets adjusted for their wholesale fee. And then I basically have one closing, and then they pick up a check just like a broker does. They pick up a check from the closing company.
So before you get to the question at the bottom there that just came in, that looks like a good question. I want to get to this one from Ryan Allen.
Yep.
Could you please talk about the differences in criteria needed between conventional and FHA loan products? What do they look at from the property? Like FHA looks for flaking paint, etc.
So they will grade your property in a scale of 1 to 5. 5 is unlivable. 4 is barely livable. 1 is brand new construction. 2 is, dated. 3 has some maintenance things. 4 is significant maintenance things that may be safety related that they might want done before closing. And 5 is there's no way they're going to write that deal. I've actually had a deal last year and went C5. That's what it's called. It's called condition 5. Went C5, the bank pulled out of the deal and the very last minute, 3 days before closing. But because it was such an outrageously good deal, I paid cash. Put 35 grand into it, was into it for 195. I then refied it for $300,000, or 335 was the value. Take 100 grand off of that. And so I walked away with 30 something thousand bucks in profit after closing. But yeah, that's the FHA VA. VA is worse than FHA. They want to make sure that when you're moving in, that you're basically spending $0 because they've accounted for your approval based on no other additional expenses. Dan, did you have something to add to that?
So right. I would hope that Ryan's looking at the difference between FHA and conventional, not so much at how they're looking at the property.
Right.
It's harder to get FHA accepted. A lot of sellers feel like there's more hoops to jump through because of the live-in status ready kind of thing. Same with VA.
Mm-hmm.
FHA doesn't mean first-time home buyer.
Right.
It means Federal Housing Authority. FHA is designed for somebody who has bad credit and a high debt to income ratio. So if that's you on a single family house with an ADU or a duplex, if you have bad credit and a high debt to income ratio, then FHA makes sense. If it doesn't, conventional is almost always better. You can be 3% down instead of 3.5 on your first purchase. You can be 5% down on a second purchase if you've had properties in the last 3 years, or 5% on a duplex. You might have to lender shop to find them, but they're out there. But mortgage insurance with FHA lasts forever, and you can only have one. And they're very picky about the 4-3-2-1 rule of moving towards a single family or into a larger single family. With conventional, there are lenders that care about that, but it's not all of them. And it's easier to get accepted. Mortgage insurance goes away automatically when you hit 22% equity, without having to refinance or pay off or sell the property. Like there's all kinds of benefits to going conventional over FHA. That's more so than just what are they looking at on the property.
That's all correct. AZ Joe, thank you for the super sticker earlier, so I'll answer your question. What vehicle would you recommend for liability asset protection? Dion.
Okay, I hinted at it when I said I have 3 that I do use. So I was hoping somebody would ask, but only share it because sometimes people have heard me say it too many times. They don't want to hear me say it again. But if AZ Joe hasn't, I'm guessing that's Arizona Joe. I went to school
Probably.
in America, so they
My
don't teach us
guess,
stuff.
yeah.
But Arizona Joe, if I'm right, let me know. The first prong of my three-prong pitchfork is insurance. I have homeowners insurance on each property with at least $300,000 slip fall injury coverage for replacement on the property, not just mortgage replacement, because that's what the lender will require, but you want to be made whole if there's a catastrophic thing. I have my deductibles about as high as possible. Most are 5,000, some are 10,000, depending on what was available when I got the policy. After four properties, or at four properties, I should have probably done this at three. Once you have a few properties, I would consider getting an umbrella policy. So I have an umbrella insurance policy on myself for $2 million. So if a problem goes above the 300,000 at the property, it then triggers the umbrella policy. All the properties are named in that. It was like $550 a year when I got it. Now it's up to almost $7. It's like $680 a year for $2 million in coverage. They also will require that your vehicle insurance has higher policies on it for the umbrella too. So that's one thing to consider. So my vehicle insurance went up like $15 a year. Second prong of asset protection is leverage. I have 7 properties, 6 properties have mortgages on them. So the banks are in first position. If I'm ever sued to a massive extent, the banks are not going to lose the properties. And the third one, the most important one, is actually fix stuff.
Yeah.
Be proactive.
Sure.
Do at least annual walkthroughs of you or a handyman looking for safety things, check banisters, windows, all those kind of, any kind of thing that can injure somebody, your walkways. Be reactive when a tenant complains about something. If it's if it's those 3 words, fire, flood, or blood, you're in immediate response. Safety issues would be in that immediate response too. It doesn't mean you have to be out there immediately to fix everything, just the things that could cause injury.
That's right.
That's my asset protection.
Yep. So that is AZ Joe. He said that's correct. Ryan Allen says great info. Thank you. You're very welcome. Let's see. Ironwood Workman. That's cool. Sounds like a good idea or good deal for the wholesalers. Sounds like it could be good deal for everyone. It's good for everyone. I mean, because again, a wholesaler can come to you and say, all right, how much do you think your house is worth? They say, well, I think it's worth 300. Maybe they're right or wrong. Who knows? If the wholesaler goes, yeah, it's probably not worth 300. It's probably worth, 275. And then he can back them down on the number and say 275 minus even a 6% realtor fee and 2% closing costs. That's 8% off that number. So you're really looking at more like 255 or 253. And that's how wholesalers usually will get that number down. And then because they're making it on margin. So what do they do when they're assigning? They're not paying any of those fees. And they have a market of buyers that they can bring it to. However, Dion and I both saw the same thing in the last, 6 months, where wholesaler deals should have just gone on the MLS and they probably would have been overpriced even to go on the MLS. So they were.
That's been my experience with the wholesalers in my area.
Yeah.
So
I've
looking
seen
for a dumb buyer.
Yeah, I have 2 wholesalers that are really good. And so when they get something, I always listen because they're really good at what they do. All-nighter hider question. Could you expand on the C5 condition you were talking about? Is that a scale generally used by banks and other parties to rate the condition of the property? It's only used by those appraisers, and banks understand it. End users like us, they would never tell you that. They will never tell you until it fails. Oh, it's a C5. Like, oh, okay, sounds good. No, that means we're not doing the deal now. I literally had to get her to say that. I had to get the banker to tell me, C5, we're not doing the deal. I was like, okay. So that's when I learned all about what C5 was. I'd never even heard of the designation, but it does actually exist. What they actually faulted in this house was they faulted that the house had cracking plaster in 3 or 4 rooms, that it had multi-levels of flooring that were safety hazards, that there were a couple of other things, stairways without railings. Like some of the stuff was super stupid, simple, easy to fix. Other was not easy to fix. Like I wasn't going to get in there and be able to replaster 5 rooms before I bought the place. However, I did it afterwards and got a massive return on my capital. But anything else to add to that, Dion? Are you familiar with the C5
Nope.
stuff?
No, I actually didn't use FHA. My first duplex was conventional.
Yep.
My second house was conventional. All my investment loans have been conventional. stayed away from FHA for a few reasons. One, worked to get credit good, kept that to income ratio, used rental income to get debt to income ratio where I needed it to be. And I wanted offers that were easier to be accepted.
Yeah, makes sense. Richard Gamino, thanks for asking the question. Super happy to have you here. Is there a legal way when setting up a trust to have it set up in a way if sued, major assets aren't shown? Talk to an attorney and a CPA on how to do that. My understanding is that they do have some concepts around that. That is not the way that we did it, because we just want to be straight up and not hide anything and not spend the money to hide anything, because it's on the up and up, and boom, here is the insurance that we have that covers those assets.
A lot of people try to hide stuff, and it's almost like a bunch of people didn't go to law school for years,
right,
to learn how to find out who owns what,
exactly.
how to track it down. Insurance, leverage, and fix stuff. It's the best way to protect yourself. We missed a question above that, Matt.
Go ahead.
From Jay Markey. It was just above
there it is. Yeah, I see it. I'm about to
go.
inherit a tenant who is often late paying rent and prefers to pay in partial cash payments, according to current landlord. What is the best way to correct this behavior? Dion, I want you to answer this one first.
I get that one all the time. That's usually why I'm buying properties.
Yep.
Clear communication. So I try to meet tenants during an inspection as a walkthrough so that they know that I'm the new owner. I leave it vague. I don't usually, unless asked directly, tell them if I'm buying it owner occupied or not, because they might have to get out. Fix things in the first couple of months. I put in the coded locks, the LED lights. I ask the tenants if there's anything they want repaired. So I'm starting off on a good note, letting them know I'm going to take care of the place. I don't do the binder strategy right away. I don't want to commit to a longer lease until I realize if it's a tenant I want to keep or not. And late payments might be a part of that. You're bound by the existing lease. So whatever the existing lease says for late fees is what you can do. If there's a due date and there's a time period when it becomes late, immediately post on the wall whatever's allowed in your area. In ours, it's 3-day pay or quit, or whatever is specific to your area. And if the tenant freaks out, you say, look, this is a business. I have to run it the same for everybody. This is going to be how we have communication that goes both ways. So this is when your rent is due. This is the laws in our area that protects both of us. And if you need assistance paying your rent, me posting this is really going to help you, because when you go to a state agency or a federal agency and ask for rent relief, they're going to ask you if you've been served with this. So I'm actually kind of doing you a favor, but these are the rules, and we're going to just right off the bat, run this like a business. And if you don't have the backbone or the heart to do that, because if you've watched any of my content, my goal is to help people, right? That doesn't mean subsidize their housing on my own. This is a business. And if I couldn't do that, if I couldn't stand there and go, here's the lease, here's what you held to, and then I'm human. If they go, look, I have a reason, here's the death in the family, here's the divorce, I went on a date and it took all my money, whatever their reason is, sure, you can make adjustments, but set the tone early on that this is not a pattern, it's not reproducible. I like to often educate a tenant, have a Dion talk, when they say something like, I need to pay my rent a week late, just 1 week late. To the tenant, they're thinking, if I get that 1 week, I'll be able to make rent, no problem, right? I tell them, we could probably do that this one time, but let me tell you why I don't want to. I don't want to have to evict you. And if I do that, here's why I would have to. You've had a month. This is how it works for most tenants. You've had a month to get the rent together for this month. So that's generally 4 weeks. If we let it be delayed by a week, so I'm going to acquiesce, be nice as I can, let you be a week late on your rent. I've just screwed you over, because now you only have 3 weeks to get the rent together for next month. And every time I've had that conversation, a lot less cynicism in my voice when I do it. I'm trying to be more compassionate and actually relate to the person. They've said, okay, I can find a way to pay the rent on time. I don't want to get evicted. They had never thought, they just hadn't processed reducing the amount of time it takes to get next month's rent ready. So then they start looking at, okay, so I was really going to pay rent late so I could do these things. Right. Yeah, those things aren't as important as having a place to live.
100%. Yep. 100%. Want to talk about something Chester Williams posted to make sure we bring clarification. A follow-up from one of the three amigos of FI videos this past Thursday. VA loan rates do not transfer from a house to a house, meaning that the vet must extinguish the existing mortgage before requesting to use their loan medallion again for a new VA-backed loan on another house, meaning the vet would lose the sub-4 rate and it would recast to prevailing rates. So I have that question into that broker who actually did that deal. He did not talk about rate recast, but I've asked the question of him to make sure that we get the answer right. So always thank you for mentioning. Right now, I'm looking for I'm looking for my second property, bought first in 2019, trying to evaluate all options. Credit is great, but partners DTI sometimes is an issue. Had FHA, but refi out last year. Any suggestions? And then I'm looking for a low down payment option and want to use house hacking again. Do you know of any suggesting lenders? I would be using that FHA loan, or even anybody that's like a normal 5% loan. I would be talking to, I think a good start is Matt, the mortgage guy. In Maine, I don't really have any contacts. I think, Ryan, that's where you're from, is Maine. I don't have any contacts in Maine. Well, I do, but not any banks, because I don't do any business in Maine. New Hampshire, completely different story. But most of those banks don't do deals in Maine. Different rules apply in Maine. Difficulty with things like evictions and things like that make it more difficult. Homesteading rights, et cetera, et cetera, et cetera. Let's see. All-Nighter Hider, The Art of Passing the Buck is a great book on legal privacy through trust structures. Volume 1's $50, Volume 2's $900. See, that always raises question for me. Why is Volume 1 50? Is it like the giveaway, the gateway? And then it's like, now I'm going to hit you over the head with a hammer. It's $900 for the rest of the answers.
So there's actually a theory in sales that works really well. And most consumers think it backwards.
Yeah.
They think somebody's going to tease you with it. So the consumer, we think they're going to tease us with information, and then they're going to sell us the secret. And that's backwards. What really happens, what works really well in sales is give away the secret.
Yep.
So in the $50 version, this is how effective it can be. And then you sell the how-to.
Yes.
Here's the step-by-step. Here's all the work it takes to get into the nuance of each stage. It's how the courses that I like do that. They give away the secret, and then they sell the step-to-step, because then it takes in more interaction, more time. It's the ones that are like, come to our weekend, and then, or come to our free meetup, pay for our weekend, and our weekend will sell you the secret thing that comes later. There's never a secret. If there was a secret, they wouldn't need the courses. Yeah, it's the ones who give away the courses, the free info, and then teach you how to do it.
Yes. That
I don't know that that's what's happening there, but
ironically, that's how my course is structured. It's going to, we're literally giving away 4, 3, 2, 1 and the details around that. And then how to then actually manage that as a landlord. That's what people are going to pay for, because there is and there's significantly more data there for obvious reasons. So yeah, thanks for that all-nighter, Hider. I appreciate that. Question, Matt, a few weeks ago, you mentioned a 203K loan. Can you expand on that? I think it was a 203K. Yeah. So a 203K is basically, it's a loan product for that buyer who's buying something that might be considered a C4, as an example, meaning that they have to go in there, they have to do work before they can occupy it. And so you can do a 203K loan, which is like a real construction loan. You can also do something called a 203K streamline, which is limited to $35,000. What they basically do is they cut you a check for the first 17.5, I believe it is, or they cut you a check after you basically show them contracts for the first 17.5, so you can pay that. And then after you've completed the work, they come back, they do the inspection, they get your last 17.5. The challenge with that is it puts a lot of weight on the contractors and GCs. You can't GC your own project because obviously they think fraud would run rampant. So you actually have to hire a GC. They have to fill out all the paperwork, list out all the GCs and the quotes for all the jobs. And more importantly, they have to basically carry the cost of the job until that last payment gets made. That's why a lot of those guys don't love it, is because the margin isn't there enough. And they're concerned that they might miss the number, especially with everything going on now today. That guess what? That means they might not get paid. Any other thoughts on the 203?
Yeah, the hardest part with the 203K loan is finding the contractor that understands how it works. The streamline might be a little easier to find.
Yeah.
And so if there's a lot of building going on and everybody's super busy, the 203 doesn't look like an easy way to go. If contractors are starving and looking for work, it might be easier to find one and then set that deal up. Meet Kevin actually got his start with the 203K loan, and he's got some really older content, was really good on how that all worked.
Yeah, totally agree. Totally agree. Jag Walia. Jag, what thanks for answering for asking the question. Appreciate it. I think you're new to the channel, or at least new to asking questions, and I appreciate that. What's your opinion buying old properties from 50s and 60s that may produce cash flow during the highest interest rate era? And then Dion, I see your response. And Dion is correct. The only time that I pause is when I'm buying a house from 1850, not 1950. Most of the properties that I buy are built in the 1880s and the 1890s. And so most of the properties I buy are 130 to 140 years old. And so for me and from my perspective, the thing that you can recognize about those old homes, in a lot of cases, they're built better than the homes that are built today, but they are built differently. So when you gut and rehab them, it's going to be a different experience than a brand new construction build. So there are typically going to be more maintenance items required with those buildings. Often you're having to retrofit things as well. So really from a cash flow perspective, I only look at what the rents are, because I can tell you, I get no more money out of one of the buildings that I bought from 1971 or 1975. I get no more money per bedroom there than I do in the older units. In fact, the older units, because they're nicer, I actually make more money on those other units because they're nicer units, even though they're in a house that's 140 years old. Dion, did you have anything else to add to that?
I do.
Okay.
Whenever I'm looking at properties, I prefer in my area to buy 1980 or newer. So I'm not dealing with lead paint or asbestos, but I did buy one that was made in 1921. And so here's the things to consider. When were the updates done? Do you have plumbing that all needs to be replaced? Do you have Pacific panels that need to be replaced? Do you have
Pacific, yeah.
knob and tube wiring? Those kind of things. When were those done? If those were done anytime since the 50s, they're probably good enough to not need a whole bunch of money. And if they're not, get quotes on how much does it cost to replace knob and tube wiring to a new thing, add that to your cost to acquire to see if it's a good deal. And the second thing is keep a larger reserve if you have properties that are from 1979 or earlier, in case you need to do lead remediation, which Matt is making some great videos on recently. So those are the two things I look at. When were the updates done? Yes. If I have to do the updates myself, would that cost to acquire still fit in my buy box? And second, a higher reserve, which my numbers work. When I had 7 or less, it was 10,000. Then it was 30,000, and when I quit working, it went to 50,000. So it's not like you need like $300,000 or $400,000 sitting in an account, but $50,000 in reserve in case something like that pops up. Doesn't tank you. It sucks, but it doesn't tank you. Right. And then I think we missed one. Can we talk about the locks that we use and why? Because we made a video together on this.
Iron Workman, yeah.
Yeah, so we have different versions, basically the same thing. They're sold at Lowe's, Home Depot. And for me, I like Lowe's, Home Depot, and Amazon to see when they're on sale. I use coded locks because I don't ever want to have to worry about keys. I've never had a tenant lockout because you have 2 exterior doors, and one is often used more than the other. So the idea of the battery dying and both at the same time is really slim. It's possible. I've never seen it. All my properties are in Class C areas. One's probably C+. Tenants really like not having keys. It's an update. It's an upgrade that tenants in those kind of areas aren't usually expecting. So it helps limit tenant turnover. And again, never had a tenant lockout. Don't have to manage keys. Have a code for me, code for contractors, code for handyman, code for tenant, and all of those can be changed anytime something changes to where I would need to change the code at no cost.
Yeah, it's huge. Because we've been doing this for over 22 years, I think we've been using them for about 10 or 11. We used to get, even with a lot fewer units, we would get 2 to 4 calls a year on lockouts. And it's almost always when you're at a family event, when you're going out to dinner, when you have, or I was in Texas traveling, It's like, you're gonna have to call a locksmith, way it goes. She's like, well, I don't want to spend that money. I didn't lock you out. You did. So it is what it is. But yeah, it just makes for a much easier customer service. And then you can have codes for, I have one use codes. So I put different one use codes into different ones. And then the contractor can use it once. And then as soon as he shuts that door, it's done. I've had a contractor then go, oh, I shut the door and it locked. Okay, no problem. He goes, I forgot I left something in there. Okay, so I give him another burn code and that's it. It's just like a burner phone, use it one time. Millennial Mike, look at these two studs, like the video, folks. Thanks, Millennial Mike, for the super chat. And you're entered in for a t-shirt.
Also, Ironwood,
Yes.
after the live stream is over, Matt is going to put a link in the description below. He's going to leave a comment with a link to the locks that he uses.
Yes.
You should check him out.
Yes. And Dion has his on his channel too. Let's see. There was another one. Oh, Trade Better 20. When is a course being released, Matt? Can we pre-order? I'm not doing pre-orders only because we're still forming some of the things that go along with it. So pricing is still being determined based on, because there's going to be a couple versions. Basically, there will be one where you can get the coursework. Then there'll be one where we actually get together kind of on a weekly basis in a group. That way iron can sharpen iron and we can learn from each other. So those are the final things kind of being put together, but we're going to then limit the first class, make sure everybody has time, gets questions. We'll pick a date and a time that will be like an hour a week, and for a period of time. So that's what the plan is. Sienna, thank you. Sienna, you're welcome. Let's see. There was another one too. Where did it go? Jag, thank you both. Makes sense. You're very welcome. And then there was another one that I saw too. Oh, Tom Kine, would you buy a house with existing solar panels? It depends on what the contract was. If they were owned by the homeowner and owned by the house, yes, I would strongly consider it, depending on the age too. Because most of those, a lot of those, not most, a lot of homes that have had these installed in the last 15 years, guess what's leaking? Their roof. I would be very careful with a roof inspection because you have to take the panels and the brackets off of the roof to re-roof the roof. That is not a small expense because it's basically a reinstallation in many cases. And so you could be looking at big dollars. So that's the one thing that I would really consider when looking at that, other than making sure that they're owned and that there's not some lease in place. Because a lot of these, what is it? Solar Run or Solar something, Run Solar, something like that. There's a company out there that comes by and says, we'll install them for free. And then you'll just make payments forever. And then there's ones that will also do financing. There's ones that will then own things. So it really kind of makes a difference. Thank you, Mrs. Lumberjack. So it really just depends. That's what you want to watch out for. Make sure that they actually own them, that they're on the roof, and find out when they were done, because installation is really key and you're still going to end up having to take them off and replace the roof and put them back on. That's the one thing I would caution you about. Look in that attic for any dripping for sure, or any wet wood. Dion, thoughts?
Yeah, it would depend on the contract. And luckily I haven't had to think about it because I live in Washington where it wouldn't make any sense to have it.
Yeah, and it only rains. Ironwood Workman, oh sweet, thank you. You're very welcome. Jeremy Kirkwood, we had a syndication trying to buy 75% equity in one of our fourplexes. Investors using HELOCs, rates went up 2% this week and blew up the deal. We will see more of this. Cost of capital is now up. Good afternoon. Hey, thanks, Jeremy. I agree. Cost of capital is absolutely up. And that would scare I don't know that, Dion, would you ever do it? I don't think I'd ever do a syndication. Would you?
I don't want to say never, but it goes back to the Warren Buffett, Charlie Munger thing that I talk about often, that everyone's heard too many times for me to repeat. Not while I'm scaling and not while I'm financially independent, but if at some point wealth was so massive and you had to diversify to protect it, because that's not how you get wealthy.
Right.
Maybe, but it's like crypto.
Yeah.
1 to 5%, throw it over there. If you lose it, okay. If you make some money, that's cool. That's how I look at syndications. You give up all the control. The main reasons I wanted to get into real estate, you give up, hard to house hack a syndication, not impossible, but you lose a lot of the things that I'm looking for. But at some point when there's just so much money And especially with a goal like mine, the most amount of cash flow with the least amount of units.
Yeah.
I would think it would, for me, it would take a portfolio triple what I have,
Yeah.
which is not my goal to get there.
Right.
But if I was there, I would look at syndications, but it would be looked at as if this money just burns up and goes away,
Mhm.
I'll at least be able to laugh and and make a video about it, maybe.
So some like government funding.
Exactly.
Exactly. Phil Nealon, what are your favorite properties, owned or otherwise, and why?
Do you mean like in our portfolios?
I guess so. It says owned or otherwise. So is there a property that you lust after?
I love my fourplex.
Yeah.
I call it
The one you live in.
the Rocinante.
Yes. The what?
Don Quixote's little workhorse.
I got
It's
you.
my little workhorse. It's side-by-side units in a fourplex, which is kind of rare. Each unit's got a garage, cash flows house hacking, and just did the binder strategy. Here's an overshare.
Yes.
The well is not working at my fourplex currently.
Oh no.
So probably the pump, $2 grand,
$2,000
in labor. Someone
Sure.
spent $3,000. The tenants are going to pay $3,000 out of the reserve account that they've been filling, right? So it sucks. After this live, I'm going to actually go get some water and take it to them and say, this is how you flush a toilet when you don't have water, because the well people won't be out here until Monday. But I went there yesterday when it quit working.
No.
And each tenant came out and talked to me one at a time to see what was going on with the well. And I did the binder strategy 3 times. It's like, hey, you don't have any water, but guess what?
So
And it
real
worked.
quick,
It worked. I was like, I can't believe this worked, but it saved me a trip.
perfect. How efficient of you.
Yes,
Were you wearing your robe?
I should have been wearing the robe.
Perfection. All right. Jay Markey, Matt. Oh, sorry. My property would be, I bought a lot that had 4 buildings on it. It had a 3, a 4, and a small 1-bedroom bungalow home, and then a 3-2 bungalow home. I turned the 3-2 bungalow home into a 4-2. I had enough land where I could subdivide the single family. I then I had it surveyed. I had it subdivided. I then refied the other 8 units. It allowed me, based on the capital appreciation of those other 3 units, to have the bank literally give me the note or give me the deed to the single family home. So that's probably my favorite deal, because I literally got a free $400,000 house out of it. But let's be honest, that's because I'm an elite investor and I was able to figure that out and put the pieces together. But that's why a lot of investors like 2 buildings, 3 buildings on a property, is because if you have enough land and can find a way to subdivide it, you can get one of those properties actually subdivided out. If the debt can be carried by the remaining units, you can actually get the bank to discharge that property to you. So it's pretty awesome. So that's my favorite. And then last question that we'll do is Jay Markey. Matt, in a 50-40-10 deal, where do you get the note for the 40%? So I'll answer that 2 ways. One is the owner actually holds the note. However, if you're talking about the actual note itself, I paid an attorney $600 to write a note.
Any seller financing deal creates a note, and that is registered with the county. It's a financial instrument that the seller owns. They can sell it, but you have a real estate attorney make it go through title, just like a regular purchase, just like the bank is making a note, because there's a note there too. There's a 50% note with the bank, 40% note made by the seller. So seller financing, it's the same way. Let's say you do a 100% seller finance deal. You make the note exactly the same.
Yes.
Either through your agents in title or your real estate attorney to get it made. It seems sketchy. Like it doesn't sound like, oh, my bank made a loan, until you've worked with a few people. I've worked with several people who've closed seller finance deals, and it's exactly the same. Everybody walks away with the same amount of security as if it was a bank doing the loan.
Excellent. Dion, my friend, tell everybody where they can find you, good sir.
right here on YouTube, Dion Talk Financial Freedom. My live streams will be Tuesday afternoons, 4 p.m. Pacific. And I think I'm going to start doing members only live streams after that. I might take a poll and see if it's after that or a different day of the week that works better for people that can't make it on Tuesdays.
Heaven knows you've got some time available.
A little bit.
It's the best. And I only say that because I turn red with jealousy. But before we go, we want to make sure that we pick today's t-shirt winner. I have a 20-sided die because Dion introduced me to the fact that these things are even made. Had no idea. And Ryan Allen, you're fantastic. He wants to make sure that he knows whether or not he's going to get one of these shirts. He's dedicated. I get it. So we'll roll this die and then see what number we are, because we will, let's see, we'll just scroll up here and then I'll be able to count right down the list. See, this is so brilliant. I believe that's a 9. It is a 9. It's a 9. 1, 2.
There should be a little dot next to the top or the bottom.
Yeah. So
It'll
there's
say
a
9 or
there's
6.
a dot. There's a dot on the bottom of the swoop, which makes it a 9.
So it's a 9.
Right? Yeah.
Yeah.
See, Dion, even more valuable than he thought. 1, 2, 3, 4, 5, 6, 7, 8, 9. Sammy Farho wins a shirt. That's a second shirt for Sammy. Good job for you, Sam. Appreciate you. We will get all those out. Long story. They're going out tomorrow. It was a little bit of a debacle this week, but they're going out tomorrow. So guys, thank you very much for all your time. Yeah, Dion, did you have something?
And to answer this really quick for Ironwood. So on my channel, there's 2 binder strategies. If you search binder Dion Talk, there's a 5-minute one that explains the concept. And then there's a 20-minute one that I made for the one rental at a time course that literally breaks it down, like the nuances and timeline of how and why and the psychology of why it works. So feel free to hit me with questions if you have any about that.
Awesome. Guys, we always appreciate your time, always having you come and hang out with us on Sundays. As I said, we're doing 90 minutes now. So we are going to, yes, you can buy the t-shirts. I just saw Ryan's question. They're going to be up on the site. We actually have this one and we have 2 more coming. The other ones will be Lumberjack branded, but they're going to be a little bit heavy on the sarcasm. They're going to have comments. So we appreciate you guys' time. Appreciate you guys hanging out with us. Please make sure that before you leave, you hit that like button also, as well as subscribe. We've got some great content coming out this week and some new product reviews and a phenomenal video. If you live in an area that reaches freezing temperatures, you must watch the video that I put out on Friday talking about winter tips that you need to get done now. Please do them now. I promise you they will save you time, money, effort, and energy when you don't want to be doing it in the middle of the night and when things break. So again, thanks very much all for attending. We will talk to you guys next week, and you'll see Dion's live stream 4 p.m. Pacific time on Tuesday. I'll be on one rental at a time on Tuesday, and actually have a special guest coming Monday that I'm very excited to introduce you guys to, and appreciate all your guys' time. Have a fantastic rest of your weekend. Thanks, everybody.
Ciao.
We're good. Oh.